Well, good morning, everyone. It is 5:32 here in Los Angeles. The news for personal consumption um, index has just triggered at 5:30. Looks like it triggered towards the downside. I'm still in an uptrend. If you guys remember, we were looking at I think it was either the 4 or the 2 hour curve on this pair here. And I have since made some adjustments. So I wanted to make sure I go over some of those adjustments with you guys. Give me 1 second. All right. So I just want to go over some changes that I'm looking at. I'm going to go to a much bigger picture here. Actually, let's start with the small picture. If we look at the small picture, I had identified, I think it was yesterday or a couple of days ago, that there was an institutional buyers area that I felt like they would go up from. This was our lowest, absolute lowest point. 107.04 was our bottom of our curve analysis, and 110 something, this right here, 110, whatever that was the top of our curve. And it got, within pips of the very bottom. I didn't think they were going to take it that low. Remember, we tried to get in here around 108, 170, 107.75. It went up for us a little bit. But as you can see, that didn't hold. So we caught an area of support, but we did not catch demand. There's a difference between support and demand. Support will only cause either a pullback or a retracement like this, but demand causes a reversal. And so I'm expecting this to be a reversal towards the upside. I thought the reversal was going to come here, but this was obviously support. So I looked for the next lower area, and it was this one. And it looks like we're getting the turn that we were looking for. Now, if I go to the 5-day, I want to show you guys what I did here. I made some adjustments. I don't think they're going to range too much across this way. I do think we're going to get, some upward action. Kind of like this, kind of like stair steps. I don't think we're going to get any ranging, but we'll see. So what I did was I decided to, instead of making all those TPs in between here, I'm just going to hold this trade and I'm going to slowly shave it off. And I'm just going to do what's called a position trade. So a swing trade is where you just go, from pivot to pivot. So it's like we're going from this pivot low to this pivot high. That's swing trading. You're just going from the major pivots to the next major pivot. Day trading is where you're getting in and out in between that. Trying to capture every single turn in between the actual main two pivots. That's day trading. I don't like doing that. That's too much work, and people lose a lot of money trying to go back and forth, back and forth, back and forth. But it does work. I know how to day trade. I know how to scalp. I know how to swing, position trade. I know how to do all of it. I'm just saying personally, day trading is just too much work, and you give back too much money because it's just too much going on in between. So I like swing trading. The only downside to swing trading is it takes a long time to make money. And unless you have a big position size already or a big enough position size to wait that long period of time, if you're not making a lot of money by the time that period is over, then it kind of defeats the purpose of waiting that long. So I understand why people like to scalp and day trade, is to build up their account. Because once your account is built, you don't need to do all of that, all extra trading, because you can just put a bigger position size and whatever that is. Like whenever this hits, that amount right there is enough for me, even if that takes, a year to hit, because I'm not just in the euro dollar. this ain't the only trade I'm in either. So when I go over here and you look, you can see how many trades I'm in. I can wait for this to take 6 months or a year to get up here. It doesn't matter to me. So that's where you want to get to. You want to get to the place where, you don't have to work so hard. You're free with your time and all that good stuff. So I decided I'm not going to do all of those positions in there. I'm just going to take my time, make the money on the way up. And it is turning. This is a very strong support area that we identified, which is where I thought the institutional buyers would kick in, and they are kicking in. And so we're going to have an uptrend here. What's up, Prince Borky? My take on oil, buy or sell. Oh, awesome. I love questions, and yeah, I'd love to tackle that. I haven't looked at oil for a minute. I'll do that in just a second. You got it. So I found some major resistance areas here. And those are the areas that I'm just going to focus on. I'm not going to focus on all the tiny little areas in here. So looking at this, I have now switched to holding my position here. Those buy orders that we got in. I know many of you probably got out because you couldn't hold it. It was going too low for you. Hey, sorry about that. That's why I tell you guys, don't use big position sizes. That way you can ride these waves out. I call them waves. Why? Because you see what they do. They go up and down, up and down. They just wave back and forth. So I can ride those out because I'm not over leveraging my account. So if you don't see me with a stop loss, it's not because I don't use them or because I don't like them. It's because my position size ain't that big. So if I put a stop loss in here, it's going to be way down here or something. And that makes no sense. We know the market's not coming way down here. So why do I even bother putting it? So I just watch it every day, and I close it or move my stop loss to protect it. So let's say this goes, price action is up here now. I'm going to have a stop loss right above my entry just to protect the principle of it. That's kind of how I use it more than anything. But I'm going to be now getting out or shaving a quarter of my position every time it goes up until we get up here. And or 25,000, I should say, of a standard lot. I like to use standard lot, so that's why I said quarter. But I've since used 2 standards and a quarter. As it was going down, I kept adding and doing add-ons, and then I decided I'm not adding nothing else. I'm just going to wait for this thing to turn around. So I'm going to shave off at 110.66. This is, I believe, a major resistance area. 112.20, 115.75, 119, and then I do think we're going to get up to 121 eventually, and then I'll be selling at 121.33. That's where I'll start preparing myself to go down to short. And then when I go down to short, I'll be coming all the way down here. Actually lower than this. This is all downtrend too. So price action is going to go way lower than this. Matter of fact, I was just working on it. Let's look at that over here. FXCM is the only brokerage that I found that has all of the historical data for euro dollar. If you look over here, I'm with Owanda, and they kind of limit. This is all the history I have for Owanda. This is it. And this is not the truth because we're looking at this now as the bottom of the market here from the last time it went up. And then you're looking at this area here. But if you go to euro dollar and you see there's more to it than just that little area. If you look back here, look how much more history there is. So Owanda doesn't even give me this. I don't even have this bottom here on Owanda. Here, it's missing. All we have is the rally, the base, and the rally. Well, that cluster there is called a base. So if I go back here, here it is. You have the rally, the base, and the rally, or that cluster there, but there's no back history here. So Owanda's making it appear as if this is the bottom, when the reality is this is the bottom here. And this is the pivot high, this is the pivot low, this is the real high time frame curve analysis. And so I believe price actions, if we look at this, price action has now come down to our TP3 on the big picture. It has reacted. First off, if we just, go down, we can see that when it came to our first TP here, it bounced off of it, played around that area for a very long time, came down to mid pivot, bounced off of mid pivot, and then what was support became resistance at mid pivot, which is beautiful. Price action came down to TP2. As you can see, they played around that area. And now, since it hit our third take profit, it's pulled back really hard. So I'm expecting it to pull all the way back to mid pivot again. That's where I think they're going. Give me 1 second. Trading View is not responding. There we go. Hopefully I have you guys back. So what I was saying was that I do believe price action is coming all the way up back to mid pivot again. I think they're going to come up to this resistance level here before coming all the way down. And this is where I think they're coming to, this very last price here, 86.21. So we're on our way up to 121, only to come down to about 86.21. So this is when the market, we're going to start feeling the market crash when it gets here. Once it gets to 121, all around the world, we should start, that's the point at which we should start feeling something's wrong here. All right. So that's it with euro dollar. Let's see what they've done since the news come out. So since the news has come out, what they've done, price action has gone up. They've taken advantage of anybody who has, moved their manual stop losses, trying to follow this trend here. They're knocking every last one of those stop losses out. They did leave an indication on the 15-minute chart that they're heading back up. That's what this immediate retest behind this supply zone means, that they have intentions on going a little higher. Where are they going? They're probably going up to this supply area here on the 15-minute chart. And we're going to get a pullback here. But nothing major is going to probably change here. Where are you guys going? Looks like they might be coming back to where these institutional buyers are to knock everybody out. Or they could just be coming to here. This is a nice this area here. Let's see if there's something in there. So we have a hammer here. Don't know if that'll work. Let's see, maybe. I don't like that they've been here so many times already, though. That doesn't look like it's gonna hold. Nope. That does. I like this here on the 4-minute chart. Let's see if that holds. Let's see how this little guy works. Let's call this a minor support level. Found this on the 4-minute chart. So let's see if that's where they're going. And they're going to continue the uptrend. So I'm not moving. I'm long for a very long time. So if you guys are looking to get in this trade, this is one good area. Or you can go back down to here, 107.20, if you feel like they're going to go lower. But, I mean, I would go up from here. It's going up no matter what. So as long as you don't over leverage, even if it pulls back on us from here, and goes down maybe to this original level here again, that's still only 10 pips in drawdown. To me, it's worth it, as long as you don't over leverage. Over leveraging means don't use more than 2 to 3% of your net asset value or your gross balance in your account. Try to stay within that. That should be your position size. And then you can pretty much ride anything up. As long as you got the trend correct, you'll be fine. All right, so while we're waiting to see if this works itself out, so right now news has pulled back about 20 pips. Looks like it's reacting off of this minor demand zone. Looks like support here, possibly. So if they do, that's great. We're going to keep going up. This is also showing me on the 4-hour. They've already knocked out some support here. I mean, some supply, and then this is all uptrend. So they are on their way up. Everything's pointing up. Yep, everything's pointing up because this is an immediate retest pointing to this demand level here. So this should all be uptrend, and then we'll just keep taking it up. All right, let's look at oil. Now that we see the news has, knocked out everybody's stop losses, I'm sure. Let me make sure I have the right oil up here. Do you want this one, Prince? I have WTI light sweet crude oil. That's the one I have. This one will work for you? All right. All right, cool. So I'm already in this trade. I haven't looked at it for a minute. But from what I have, my curve, meaning curve analysis is just, where is it at? So curve analysis just means what two prices do I believe the trend is working within? What are the institutions? I'm an institutional trader, and so I kind of follow the direction of the institutions as they push the market in whatever particular direction. So when they're buying, then we should be buying because they're the ones that's going to move the market the most. Yeah, this is U.S. oil here, Prince. This is the spot price. So I just wanted to make sure that this is what you was looking for. It's also the one that they use in the futures market. So, but it looks like that's the one because this is U.S. Brentwood. There's a city called Brentwood over here. Brent crude oil is the European one. So this is U.S. But basically, the curve analysis that I believe the institutions are working within would be I have the bottom at 61.50, and right now the top is 127. The reason why I'm saying for right now, oil is going to get higher. We're moving into an age where cars are going to be electric in the next 10 or 15 years. The U.S. here has already put out laws that said no more gas or diesel engine vehicles, petrol, whatever you want to call it, can be created after the year, I believe, 2030. We only got 7 years left. And so when that happens, what do you think the price of oil is going to do? It's going to go higher because the only people that are going to be using oil would be the big boys like planes and trains and, big submarines, big, boats or whatever you want to call it, cruise ships, things like that. They're so heavily needed, and they're also in a heavily need of power that right now I don't think we have batteries that'll handle all of that. So what's going to happen is you're going to find that airline tickets are going to go up because our cars are probably going to go down. The car prices are probably going to get cheaper. And what's going to end up happening is traveling is going to become more expensive. So if you want to get on a train, a plane, a boat, go cruising, any of that, that's probably going to all go up. Why? Because oil is going to get higher. Why is oil going to get higher? There's just not a lot of demand. And when there's not going to be enough, then what ends up happening is the price goes up. So when there's no demand, people start raising prices because they realize I'm not making as much money as I want. So it just starts going up and up and up. And so I think we're going to eventually go well beyond this. That's why we have this long immediate retest here showing us that the price of oil is going to go higher. And so right now I'm in a buy position for a very long time. That's basically my answer, Prince. I don't know if you day trade or not. You can go back and forth. And if you do day trade right now, I'd stay long at least up to here, up to 81.61. As you can see, I'm going all the way up to 113.90. So you can hold it for a long time if you like. But if you're just trying to get in and out quickly, the very next place swing would be here at 81.61. And if you're just, let's say, day trading, then your next exit would be 74.85, somewhere right here, the top of this pivot. Let's go down to the 1 day, take a look at it. So this area here. So if you're trying to just do some quick scalping or make some fast money, actually it will be here. It will be 73.74. If you're just trying to make quick money, because you're probably going to get a pullback here in this area. If you're trying to go swing, then I would stay in the trade until 81.61. That would be a swing trade. That would take a little longer for you to take profit, but all of this is uptrend. And if you want to go even longer, the next major resistance level is not until 91.50. So that would be a long-term swing position, 91.50. And then if you want a position trade like me, go for the big boys, go to 113.90. Jason says, makes no sense. Why would price increase? If demand increases, no one wants to buy it, so they'll lower the prices. No, what I was doing was making a comparison. You're talking about technical analysis. What I'm talking about is the real world. So if you're out in the real world and oil is going up in price because we're not using that much of it, we're not demanding it any longer because we're not driving cars. That's what I meant by demand. We're not demanding a lot of oil because we're driving electric vehicles. The only time we're going to be demanding oil is when we're flying or in planes or in big boats. That's what I was trying to say. Nobody travels that often. We have to go to work. We have to do other things. We can't be in planes all day unless that's your job. So what I'm saying is the industry is not going to be making a lot of money in oil. So what are they going to do? They're going to increase their prices so they can make up for the loss of, and what I mean by the people, I'm talking about those who supply oil to the world. They're going to be losing a lot of money. And so how are they going to make up for the money that they're losing? What they're going to end up doing is increasing the prices. And when they increase the price of oil, that's going to go up for the big boys. And when it goes up for them, price is going to go up for us. And we're going to start spending more and more and more money. So I wasn't talking about demand from a technical analysis standpoint. I was talking about from the standpoint of consumption. All right. So I hope that made more sense, Jason. Prince said he sold at 71 and now it's at 72.60. Yeah, because it's in a long. So it's going to be going up for a very long time. I think I got to get out of that trade. When you say you sold, do you mean you went short or do you mean that you sold your buy position and got out the trade? Which one are you talking about? It sounds like by you saying, oh, okay. Yeah, you went short. Got it. Yeah, if you went short, yeah, it's already turning around now. Another thing is when the dollar, start following Dixie. When the dollar goes down, oil goes up. And Dixie right now is in a downtrend. So does the euro dollar. They're inversely correlated. Okay, so just keep a watch out for Dixie as well. But as you can see, I've been in oil. I got 2 positions on oil. I've been in it for a while since it came down here. I saw this area here of support. Thought I'd get in early. I was in drawdown for a while. It went against me a little bit. But I just held on to it like I always do. And so now it's working out. So there you go. Hope that helps. If you follow me, then this should be, if you go on here, I think I should have it. Let me see. Give me 1 second, Prince. Let me see if I can find a good place for you to get in if you haven't jumped out already before you turn it around. Go to my tags. WTI. Yeah, I do have that trade in here. So the last post I did was here. It was May 3rd. So I've been in this trade for almost a month. So you can catch it here. It's the WTI spot 4-day trade. So this is the trade that I originally was looking at. So as you can see, I had a buy order here and it hit it, went more below than I wanted or anticipated. So I just rode it out until it turned around. There you go. So if you guys are following me, then or Prince, if you're following me, you can pick this up on my page. It's out there. Let me see. Did you already get out, Prince? You want me to find a place for you to turn it around? Or did you already jump out? Let me know. Not yet. All right. I'm still in. All right. Perfect. Give me 1 second. So let me see what's. I see this here as possible support. Some minor support level. All right, let's see what's in there. Oh, I don't like that. Oh, yes, it is. So it's already turning into demand right now. So 72.21 would be like the best price, but it's literally leaving there almost right now. 1 second. So if you know what dollar cost averaging is, what I would do, it's in the middle of going up right now. So it's creating right now the what we call a leg out. So this is the uptrend. It should pull back to this area, but there's no guarantee. It could keep going up. So I can't guarantee a pullback. What I can say though is if you do a dollar cost averaging, that means reverse. Are you using MT4? Yeah, cut some losses. Yeah. So the only way to cut losses is this is look like they're creating the demand here. So this is looks like this is the lowest point they're going to go anyway, which is 72.21. It's only at 72.74 and they're pushing. So they're probably going to pull back to this, but dollar cost averaging would mean to reverse your position, take half of what you normally would trade, put it here, and then put the other half at 71, let's call it 22. And then if it pulls back, then you'll be able to capture that other half of your position and then write it up. You don't want to reverse your position and put the same whole position that you have, because if it pulls back, now you're in drawdown again. And so you want to make sure you cut your losses by dollar cost averaging by splitting that up in half. I don't see a lower point just yet. They have to deal with this first. So it's up to you if you want to jump out and then put half. Let's say you have a standard lot and you're, you know, going short. You said you got in at 71.34. Yeah, 71.34. Yeah, they created a new level of demand right here. So I don't see them going down there. But 72.21, I can see the possibility of that. So looks like somewhere in here we have a little bit of resistance. So it's possible that in here they're going to come in this area, pull back down to this level, and then continue the ride up. So you can wait to see what they do here, but that's quite a ways up. I don't know if I would do that either. Oh no, that's a lot. 1% is a lot. Yeah, so just know, big picture, I'm in an uptrend. The big picture is an uptrend, so you want to be facing that direction. Right now, they just started a new demand level, which is right at support as well. It's at 72.21. They just took off to the upside, but they did that because Dixie's dropping. That's the reason why that's happening. This is all because of news. So I do think it's going to pull back, probably from somewhere in here. So you can elect to hold it and take your chances on it pulling back here. I just can't tell you when it's going to pull back, but I do believe they're going to come back here. So you can take your chances and hold it and not reverse it until 72.21, or you can close it out now, put it long with half of a position. So let's say you're in a standard lot, completely get out of your standard, put a 50,000 unit position to go long and another 50 at 72.22. And wait for it to pull back so that if you're in drawdown, you're only in drawdown half of your position and you're just kind of waiting for both of them to go up. So those are your options there. So that's what I would tell you, that I don't think it's going to make it back down to your 71, whatever that was. Let me see here. I'm just making sure there's nothing else lower. Don't you hate when you get in and the moment you get in, it goes the opposite direction? It feels personal. It's almost like somebody was watching you. I hate that feeling. Yeah, I'm getting the same answer. So I'm now on the 2-hour chart. I'm using this fib as the pivot high and the pivot low. You can already see they've already come down into this support level here, which was clean. They're reacting off of that support on the way up. Anytime you get past the 25% mark of the fib, that's the beginning of them coming out of demand. And so it's ironic. We were on a big picture and we saw them at support. We come to the smaller picture and now they're coming out of demand. So it's the same level. It's that 70. Well, it's not the same level. It's a little lower. This one is 72.21. This one is 71.70. And where did you get in at? 71.34. So the very lowest that I see is 71.70. That's the absolute lowest that I see. Otherwise, 72.20 would be the only other place. So make your decision based on that. Your issue is, I don't think they're pulling back right now. They're still going to go a little higher. Maybe, I don't know, somewhere. These pivots here, they're going to come up to this 66 level somewhere. So that's 73.30 looks like. And then they'll probably pull back to this 72.21 or this 71.70. So whatever you can handle on your account, kind of manage it based on those numbers there. And I hope that helps. I know I gave you a lot, but tried to give you as much as I see so that you can make the right decision for yourself. Anyone else got anything you want me to look at? Other than that, I'm gonna go back to just gonna check out the rest of my trades. I was in drawdown on quite a bit of them because I was waiting for things to turn around. What are you doing, euro dollar going lower? Let's see. Nope, still respecting that level. So it looks like if you guys got in on a market order long, it's still going long. So looks like this support level or this demand level on the 4-minute chart is this one that we found. Looks like it's working out. So they came out, came back in, went back out of it again. So it's working. So euro dollar long for a long time. That's where I'm at. Let's look at everything else that I got going on here, and then I'm out of here. Where are my trades at? Here we go. I'm waiting for this thing to turn around. What's going on with you? What are you doing? So we got in this trade to go short. As you can see, it started going short, but it has since pulled back. This is some decent resistance, but not the best. So hopefully they come down from here. As you guys can see, we're at resistance on the Aussie yen. I mean, we're really way at the top. Do I have it up here? Aussie yen. Yeah, I do. So this is the curve that I have for Aussie yen. As you guys can see, it already came up and hit our sell limit order at 97.90. Since it has come down, we have gotten out of the trade because it pulled back against us early. We were going to take profit here at 84. It pulled back early, so we got out of the trade and TP'd early. And since then, I identified this area, this base drop with this nice long leg out institutional candle, some people call it. So I was anticipating them dropping from here, but as you can see, it's been 3 weeks, actually 4. Each one of these candles is a week. So for a whole month, they've been playing in this area here that we found, and I've been waiting for them to drop. They gave us a little bit of drop here with this red candle, but since then they've gone back up, and now they're still trying to decide what they want to do. So unfortunately, we're sideways, and if you look at the sideways range, it's been sideways since March of 2022. So for a whole year, Aussie yen has been up here. So I don't have any answers for you as to when this thing is going to fall because it's been up here for a year. But I am short on Aussie yen long term, and I'm headed down. So I'm in drawdown right now. I'm just going to hold it because there's nothing else to do. Aussie dollar, I'm long on this one. Ooh, I was off on that one. All right, so with Aussie yen, I am long on Aussie yen. But you can see they have since come back and played around the price that we were in, created a new base candle, dropped again even lower. Where are you going now? Oh, they're already where they want to be. So this is not the best, but it's kind of a hammer, but it's an uptrend formation. And they're right there. The reason why this candle is blue, I have an oscillator that I programmed down here, and I told it to tell me when orders are added at the last minute by institutions. And so it kind of catches when there's a buildup of orders. So these are buy orders that were built up back in October of 2022. So there's a lot of buying pressure here. So a lot of institutions have placed buying orders here within this price. So because institutions have done that, I'm expecting the bulls to kick in and push this market back up. So I'm going to hold this again. I've already added 3 positions. I'm not adding no more. I'm just going to ride it out now that it hit this. And we're just going to wait for it to turn around, and we're going to close out at 71.15. We're going to take it all the way. There's a little supply zone it looks like I've identified on the 1 day. Let's go there. Oh, they already hit this. Okay, so this is gentleman's rule. They already have 3 taps on this supply zone here. So because they already have 3 taps, that last tap, normally you don't have this. Wow, that was ugly. Normally when you have an area of supply like this and it hits, each time it hits, it gets weaker, not stronger. That's typically not what happens. You typically get the strongest hit will be the first one because you have the most sell orders being satisfied. Then when it comes back up to the selling pressure, there's less selling pressure up here because they took it out with the first one. So then you have less of a pullback, and then you have less. This one got stronger over time. So that's an unusual way in which they move this market. So I'd have to look back to see what was going on between in the last, like, since February till now, kind of catch the Aussie news to see why it acted that way, especially with all these institutions buying here in this area. And look where I'm at. Where I got in is right where the institute, pretty much. I got in and kind of higher than them, but the institution started buying here. And whoever these market makers were up here that pushed this below that was huge. That's a lot. So, but again, they pushed it down because there was some more over here on that higher time frame that we were looking at. There's more buying pressure down here as well. Excuse me. As far as getting in on this trade, if you want to get in on this trade, I would do a buy stop order, probably above this here. So if the market if price action opens and closes above 65.48, let's just call it 65.50. If price action opens and closes above 65.50, then I would consider another buy position. So if you guys are looking to get in to go long and capture it, then I would do that. Otherwise, and that's only dependent upon if it's reacting off of this support here. If this level of support is strong enough, it'll push it to the upside. If it's not strong enough, then they're coming down here to this next level here, which is 63.72. The problem is that's like 200 pips. I don't know if Aussie has 200 pips in it to the downside. Let's see. I don't like this formation, so I don't like that one. Yeah, this is saying more down. Let me redo this. Hold on. Because I don't like what I'm seeing. Hold on. All right, so this is curve here. So Aussie dollar is definitely in a downtrend. Let me clean all of this up. I need to figure out where I'm at with things. Good morning, Polarche. How are you? Check out Aussie dollar on the 1 day. Okay, I will do that. Actually, I did. I have this supply zone here on the 1 day mapped out. So I think they're on their way up to there. But I didn't like what I was seeing at first. So I think there's something down here too. But let me get my orders off of here so I can see. There we go. So I have resistance here at 67.83. Then I have a supply zone at 68. So there's something in here, obviously, going on. I caught that little bounce, but expected price action to come down. I was talking for support 63, 72. Got it. Never mind, you already have it on your chart. No problem. Hey, that means you just gave me confirmation. So you gave me, I appreciate it. So we do have this level here. So thanks, Pilarche. We're seeing the same thing. So that makes me feel better. There's support here. See, this is why I love trading with other people. Now I feel way more confident now that somebody else is seeing the same thing I'm seeing. What do we got here? And this is the 1 day. All right, so we're still waiting for that. That's pending. What's today? Let's go ahead and put the date on this thing. All right. Sometimes I just like to put the date of when I last looked at it. So now our issue is this. If we're looking at the big picture, price action has already come down into our take profit 2. It's pulled back really hard. It's on its way back to that same area. So let's see if they could potentially bounce off of that as well. Because this is the same area I was saying support might work, but I had support higher. I had it up here. Oh, that's the same as this. All right. Support could work. Not saying it will, but it's possible. Especially if the Dixie keeps going down, then you're going to see this go up just like euro dollar. Or do they have a couple of hundred, more pips, 150 or so more pips to the downside before turning around? That's what we're trying to figure out. As of right now, it's still down. It pulled up, went into this area here. This is a downtrend formation. And also where it went up from is downtrend. So it looks like it still can go down. Either way, it looks like it's going to come down a little more. So let's see what else is in there. Yeah, see, they're already in an area where there's a lot of buyers. So this is where price action is dealing with these buyers right now. And then there's buyers right below that. So there's a whole area full of buyers. So I'm not going to be able to identify this one because there's buying pressure here, and unfortunately, the buying pressure is a very wide range. That's a 286 pip range worth of institutional buyers. Somewhere in between 286 pips, which is either this price or this price or this. Those are the three main areas I would identify. Let's go back to that one day. So if I were getting in this trade, I would, again, where's my, oh, I'm already in it. I'm like, where's my trade at? Positions. Oh, it's way up there. Oh, but I already have 3. And it's going to turn there too. I got in at the wrong spot. See, Prince, I did what you did. I got in right when it was going down. When I thought it was going to pull back up to here, like it's been doing, it's been ranging back and forth. So I was trying to catch that last push up, but they went down instead. So if you guys want to get in on this trade for a long, if that's what you're feeling, I would not consider it until after 65.50. Price action has to break this before I believe it's going to go up. Otherwise, it's on its way down, and it's going to either turn from this 64, 63, or 63.72, which is what Pilarche and I both saw first. So this is the first thing that caught my eye, not this here. So as of right now, the safest bet, the most conservative option you guys have would be to get in at around 63.72. That's what I see for Aussie dollar. And I'm just going to put this on here too. Another time frame we were looking at, it was 21 day or something, some weird time. Oh, it was 21 day, yeah. The question we have to ask ourselves is, what is it responding to here? You see all that buying pressure? There is a lot of it in it. This is a 30-day, basically a 1-month chart. Yeah, if I had to take my chances, I would take my chances with the lower one, the 1-day level. I think this is a minor support level and that this is more of a major one. So let's do minor here and let's do major here. All right, so that's what I got there. That's a minor level. It's hitting something, obviously, or reacting to something. Let's go to 4-week. What it's reacting to is the proximal of this candle here, the high of that candle. Yeah, that bottom one looks the cleanest. All right, so We just need more confirmation on this one. Big picture, it's in a downtrend, but it's preparing to pull back. So we have to, and that pullback is going to be big. That's going to be a massive. It's like a 300 pip pullback. Well, at that point, it's called a retracement if it's 300 pips. We're just trying to see, are they going up from where they are, or are they going to go lower before going up? Let me see here what we got here. Where's the daily open at? Oh, the daily open is at the minor support level. So that's what it is. The price action opened there. Yeah, they're coming down here, you guys. So we got daily open. $146. Where's daily open? Daily open. There you are. All right. So yeah, they're coming down here. We have price action on the 12-hour. So here's where all the institutions have started. So this is the candlestick in charge that caused all of the uptrend here. It's right here, and it is at the 1-day major level, and then we have a daily open. So price action could come down as low as 62.92. So get ready, Andre. If you're buying, you want a dollar cost average this one as well. Maybe put an order in at support, which is 63.72, and then I'd put another order in maybe here. Matter of fact, let's go ahead and do it. What price is that? 63.63. Let's do the institutional number of 63.66. Let's get out of there. And then the other one is 63. How big is this here? Oh, that's massive. That's 50 pips. All right, so let's do the halfway point to that there. Let's go here. 62.98, so let's do 63. All right, so for those of you who want to be conservative, which is what I suggest that everyone do, conservatively, these are the two areas that I believe price action is coming down to. Right now, they're working with this. This. So let's change this. All right. This is our curve. All right, you want to do dollar yen after? Cool. So this is the curve that we have right now. Let's see what we got. Let's try both ways and see what happens. $65.47.6. Check the 14-hour. Okay. Now I will say the 12-hour, as you guys can see, is highlighting. So this area that we were looking at, we had picked 63. And the indicator here, our indicator picked 63.24. So that's pretty good. So I'm actually going to go with that. Let's do that. Let's leave this as major. And I'll change this to 63.25. Let's do that. All right. That looks like we might be in business. All right, so price action just came down to 65.50, which is a support level. It's playing around that. So it looks like that's where they're going to create a base candle and possibly drop. As you guys can see, price action opened here. They came up to the open again, the daily open, which was near the take profit. And so they look like they're just playing between this area. So we need to figure out which way are they going to break out. This area of 58 pips, they've been going back and forth within 58 pips. And we need to figure out where the breakout is. See if I can do it now. 1 hour. Yeah, they've already hit this daily open here. They hit that thing perfect. I like this downtrend formation. This color here showing that we have sellers in place. This is all downtrend here. So this support, it looks like you're going to get a pullback maybe. And that's the daily open. More buyers in here. This is not going to hold. Let's see what happens, guys. Let's see what happens around the daily open. So if they break past this daily open, and obviously if they break below 64.90, then yeah, I see it continuing the downtrend. Right now it's already in a downtrend. They're playing again between these two daily open prices. So we need them to break one of them. And from the looks of it, looks like they're gonna break this one here, this bottom one. Because that looks like downtrend. So let's go back to let's try that 14-hour. You were looking at this level up here for Larche on the 14-hour. That's probably what you were considering here. Let's go to the 1 day again. So the 1 day is showing that as a downtrend, which means it is support and it's going to pull back, but it's not going to hold. He said I was. Until you saw this daily, the daily trumps that 14-hour, this downtrend. So the daily is still holding this lower one, which the 12-hour matches as well. So that's down here. And that goes along with these two here. So I'm gonna go with this for now. This is what I'm looking at. I'm looking at Aussie dollar in a downtrend, which is not good because that means my euro dollar's got to go down some more. Euro dollar is probably going to play with that range, unless Aussie dollar is trying to play catch up. But anyway, I see Aussie dollar is still coming down to support. And then this will be the safest bet for you guys to get in, which will be 63, 25, and 63. So I'm going to have to switch my positions now. Take a loss. Positions, orders, bam. All right, so if I do that, let's do not a million. So 303. Let's get that back. So that is 64. 75. Let's do 603. Flip all those trades over. We'll exit at 63. 70. And then I'll get about half of that. So that's not going to break me even. Let's do 63.33. There we go. All right. Boom. All right. So if price action comes down here, I'm going to take a lot. All of this will reverse. I'll lose all of that there. But then it'll start trading to the downside. And then I'll TP at 63.33. You guys can still be safe, get out at support, 63, 67. But if this is truly demand down here, I'm just going to ride it all the way to the bottom so I can try to take back whatever I can. But that's only if it comes down here. If it doesn't come down here, then this will all become positive and I'll just ride it back up. So we'll see what happens. But that's my analysis so far of, let me get rid of all of this. I don't need any of these anymore. I could just delete that for now. We'll just leave that support level up there. All right, this is what I like. We're good here. All right, so if it comes down, I'll reverse my position. What price is that? 64.90. 64.75. Let's do 85. All right, so 64.85 is where I'm going to do a sell stop. If it breaks this area here, it's going to reverse my long position here, and then I'll lose money there when it triggers here, but then I'll make all that money back as it shorts back down to here, and then I'll break even. I'll actually make a little bit more, but and then I'll get back in and ride it back up. So that's what I'll end up doing. All right. So there you go, Prince. See, if you're still on, you got to see live. And nobody's perfect. Okay, we all make mistakes. I got tired of, I was waiting for this thing to drop. I was short at first, but it kept doing this to me. So I was trying to take it back up again because I saw a supply level up here. But the one time that I want to go long from this range, that's the one time they want to short. So they got me. But it happens to the best of us. That's why I like to follow the big picture trend. If I'd have just stayed short, no matter how long this took. But you can see, if this thing you're in this trade from March, and 2 months later, you're like, dude, you're never gonna drop. It just kind of gets to you emotionally. So I let it get to me instead of holding it and then waiting for this to happen. So we'll see what they're gonna do with this here. But right now, Dixie shorting. With Dixie shorting, Aussie dollar should be going long, which is why the support level would work. If that's the case, then yeah, we're in an uptrend. Otherwise, this thing is going to continue the downtrend. So you guys just be careful. If price action opens and closes above 65.50, you need to consider going long. If it opens and closes below 64.90, you need to consider going short. So that's where we are. It's this range here that it has to break out of. So that's the only way we're going to know is it has to break out of that range here. Whichever way it breaks out first, that's where it's going. All right. So let me save this chart here before I lose it. Aussie dollar. Downtrend. And this is on the 12-hour. Delete the other one. All right, you guys. Somebody said dollar yen, didn't? Oh, Casey. All right. Looks like I'm in dollar yen. And that's in drawdown too. Oh, yeah, I remember this one. So I had two levels I was considering, one on the 9-week and one on the 8-day. So the 9-week one was based on resistance, which was this. And as you can see, that didn't work out. But we do have a supply up here on the 8-day. So let's go there. Oh, are we already there? Yeah, we're already on the 8-day. So this is the 8-day. So this drop, base drop, long leg out here. This is the area I'm anticipating. Excuse me, guys. I'm tired. Long week. But, and it's still 6:45 in the morning over here in LA. So, let me know if you guys got anything else after dollar yen. Otherwise, I'm going to call it a day. But yeah, 8-day, I have dollar yen up here in this area, Casey. You said you're long at 140.21. Okay. Get ready. Your stop loss at 139. You're going to 142.18. I don't know. You're taking a chance. It's between here and there is where we're probably going to get a pullback. So, or a downtrend again. So what is that? 140.93. You're going to 142.18. The highest I have is 142.48. So it's possible. I believe we're going to get a turn between 140.93 and 142.48. So this is where you need to be careful. Let me see if I can dial it in and figure it out. Let me move this. Actually, let me do this here. All right, 152, 134. All right, Casey. So this is not the proper curve. This is just the fact that they're turning around, because this all right here says downtrend. So they plan on coming down lower. Right now it's just retracing to the upside. You might be in luck, Casey. It's possible that it can go as high as 142.53. And what did you put? You put 142.18. So good luck. So I have 140.93 as the lowest, and then the highest I have 142.53. Let's get out of there. Let me see. I just want to make sure and validate we get something on a lower time frame. Let's see if we get the indicator to highlight something in here. Make us feel better. That looks pretty decent. Let me see if it highlights it though. No? Interesting. Oh, I got the wrong pivot. This is not the pivot low. This is the pivot low right here. There we go. All right, so Casey, my answer changes. My apologies. My answer is the highest I see it going is 142.20. You have 142.18, so that's good. So if it goes up there, that's the highest point I see it going up to. And it's because of this guy here. So this is the 2-day. So 8-day. All right. Oh, you're welcome, Casey. Anytime, man. So where are we with this here? All right, so this is what I found here. So they're in there. So it's possible that they can go up to 142.20 and then turn around. So what I'm gonna do is I'm gonna sell again at 142. I'm not going to 20. I'm gonna get in early, and let's do nah. Let's not be greedy. Let's just do that. And then I just won't have one of those just yet. All right. So now that we've done that, let's flip this bad boy back to the short, which is where it belongs. And let's go to the real picture. Week 10 month. Oh wow, where are they going? So I was trying to figure out once they turn around and start shorting, where they headed to. Oh, it looks like down here. That is far. Yep, that's it. Two months. 2 weeks, 6 weeks. 10 months, 2 months. All right, so big picture I have here is that we have major support here. It already came down to where we would have TP'd at 133.97. Came down to that area, played around it, reversed, pulled back. Dang, they might go higher than this supply zone, but I hope not, because I don't like this racetrack here. But I can clearly see they're on their way down to this area here. There's two areas, the level on level. There's major support here and major support there. So this support is also mid pivot. All right. I need to get out of this thing then. If this is 10 month, what is this? 2 months. There's nothing on the 10-month chart. What am I talking about? 2 month. Definitely something there. And then 9 week. Okay, definitely something there. All right, there's nothing on the 10 month. 2 months, 9 weeks. Oh wow, I did this back on April the 17th. That's the last time I looked at this chart. So 9 week. Oh, so I'm already ahead. So the 9 week begins here. I just wanted to make sure my TP is higher than the 9 week demand level. And it looks like it is. So 111.33. Oh, that is a strong level of support. Let's change this to $20.25. There we go. So whenever we can catch this downtrend again, whenever it decides to turn, then we can shave here at 134, at 125.50 we can shave again, and then at 119.25 we can shave, and then I'm going to get out at 111.33 because at that point we're in all of this choppiness and there's not much information that I can see as to where it's going to turn, so we have to just wait that out. But as far as a guess, we have 107 and 101, but those are too far away. That's like 600 pips away from each other, so I'm not about to take no chance on no range that big. The only chance I'll take is the lower one, 101.63. But I wouldn't take a chance getting in this high and then it goes down that low. But we'll get there and cross that bridge when it's time. As of right now, I'm just shorting down to 111.33. All right, let me save this. Sell order. I'm just gonna put it up there just so I can see it. Let's do 144.05 and 142.15. Uh, 101.66. Let's get rid of this. All right, so even though I'm getting out early way up here, that's only because of all this choppiness. I don't know where they're going to turn it. And if I were to take a chance on going long, it wouldn't be until way down here. I'd be super conservative because you don't know what they're going to do up here. If they turn early and I have some very strong confirmation that they're going to turn, I'll let you guys know. But other than that, I'm going way low. And when you look back, all of this right here, this looks really good. That's just nice support right there. That's clean. I'd rather take my chances down here. And it looks like they might even go lower because this looks like more of an immediate retest pointing to the bottom of that right there. That blue line. So it could go as low as 99.54. So if it does that, that's another 100 and something pips from where we are or trying to get in. So it still could go lower than that. So I'm just saying it. I don't want to get DMs from you guys. Oh, Professor, your trade ain't working out, blah, blah, blah. Look at the whole picture. You have room for drawdown. That's why you guys DM me, because your position size is too heavy and you get nervous. That's what that is. That's all that tells me when I get those DMs. You got a big old position size and you scared you're about to lose all your money. That means you're over leveraging. So I want you guys to see where I want to get in at to where it could potentially go. It's a 163 pip difference. And I know this going in, but I cannot tell you exactly where within 163 pips where they're going to turn. I can just tell you that's the range. You have to decide what your account size can handle. Not me. That's not my job. My job is I'm just sharing with y'all what I'm doing. What you do is on you. Okay? But I don't want DMs about this ain't working out, this ain't drawdown, where do I go? What do I do? You hold it. That's it. It's going up. That's all I can tell you is it's going up eventually. For in this area down here, wherever support starts, which is support's going to start at 101.66, but support goes all the way down to 99.98. There's a range. And there's a range every time. I don't care. There's a range all the time. There's a support range, a resistance range, a supply range, a demand range. It's never one price. So somewhere within a range, you have to be prepared to turn around, and you guys have to position size properly to handle that range. So see how I already knew there's two ranges here that it could turn from, the 9-week and the 8-day and the 2-day. I did my homework. So I was already prepared for this to go against me. I wasn't shocked. That's all I'm saying to you guys. Don't be shocked. Understand what it could possibly do. Notice I already put this 144.05. I'm not going to be shocked if it goes to 144.05. I'm going to be mad, not shocked. So just understand what it's doing, position size properly, and you'll be okay. That's it. So this is my analysis of dollar yen. It's going to take years for all of this to work out because this is position trading. This is big picture. Let me go ahead and add that because I know I'm not going to come back on here. I'm going to forget about this trade. So let's do this now. I'm notorious for putting trades in, forgetting about them because I do swing trading so much. My trades don't hit for a long time. 125.50. Ooh, that's not it. See, I'm messing up already. 134. I want to buy back some of my position. There we go. 125.50. And this is how we shave here in the US. So if you guys are using MT4 or 5, it's different. Make sure you consult the manual on how they do that. I would share it with you, but I don't use that platform anymore, and I don't want to misguide you in case they made an update or something. So make sure you consult the manual on how to shave some of your position off. But that's what I'm doing here in the US. That's how we do it. We have to do an opposite or a reversal position, and that's how it shaves. If you guys are outside of the US, you should be able to hedge. You should be able to trade both ways, which I think is easier. I mean, you know how much money I'd have if I could trade both ways? You can't get it wrong at that point. You just put two trades in, and whichever one works out, that's the one you keep. It's like, it's not hard, but people still lose money, even though they can trade both ways. So, anyway, we can't trade both ways. You got to pick one. You better know which way the trend is in the US, or else you're screwed. So, we don't have the option of doing both and seeing what happens. So, anyway, this is me shaving here and then closing here. And then 101.66. I'm going to do that there. Actually, let's do this. I'm just going to prepare for both of them. Let's do, what price is this? 99.54. So let's do 99.66. So that'll be 200 pips away from each other. You see how I'm prepared for that? That's a 200 pip difference. And if it happens, I'm going to ride them both out because I'm not over leveraging. That's the key. 101.66. and then 99.66. Also in the US, they won't allow us to do two position sizes that are exactly the same. They have something called FIFO. FIFO, it's an acronym, first in, first out. I think some people call it FIFO. So however you want to pronounce it, it's not even a word anyway. So it doesn't matter how you pronounce it. It's just an acronym. First in, first out. So that's why you see me using different, like one more extra, micro lot on top of the standard, because they won't let me do two standard lots together like we used to in the past. They just changed the laws here. So anyway, here's where I stand. I'm already in based on the 9-week chart. There is a supply zone that begins here at 140.37, but it's possible that it could go all the way up to 142.20, I think it was. So I'm gonna, because of spread, I'm gonna get in a little early to make sure I get triggered if it goes up there. But I'm also prepared for the fact that it could go all the way as high as 144.05. I'm not gonna add another position up there because I already have. If that triggers, I'll have two. I don't want to put too much on one pair. I like to diversify my account. That way, if I'm wrong on dollar yen and it keeps going higher and higher and higher, at least I'm right on my other trades. I don't want to be too heavy on one trade. So no more than about two positions is what I kind of limit myself at. And then that's it. So let me save this chart before I lose it. Save it here. And then go here. Save dollar yen. Oh, I already have the name in there. Cool. All right, that's where I'm at with dollar yen. Casey's looking at pound yen. All right. I'm not in pound yen. But you're in luck. I look like I must have charted it and found some flip zone on the 12-month and the 21-hour. Let's look at that. 12-month. Ooh, wait, that's clean. Yes, that's clean. What are you doing? You're going long? Okay. You're going long to 172.84. And what do I have here? So this is a flip zone here. Perfect. That is gorgeous. But also have something on the 21-hour. Oh, I don't have flip zone in here? Maybe I have it on the other one. Oh, I guess I don't have it. All right. Well, time to create one. I really don't have it. AFG. Nope, I don't. All right. So we're going to go here, here. And this one is from the 12-month chart. All right, and then let's go to 21. What does that say? 21 hour? Yeah. I'll be finding stuff on the weirdest time frames. Oh gosh. It's one of them, huh? All right, what's the date on this thing? Oh yeah, 2016. Jeez. $21. Oh, this thing here. Uh, yeah, it looks pretty nice. But I don't think that's gonna hold. Oh yeah, I like it now. I think I was on the wrong time frame, so I like this 3 week. I sure do, Casey. Um, there's a thing called multiple time frame analysis, and that's what I do a lot of. Um, Sometime when I save my chart, let me see if it'll let me do it here. So if you go in here and you choose a category and you go to trend analysis, part of trend analysis is looking at multiple time frames. That's why the premium allows you to see seconds charts and you can see weird time frames, like I'm looking at 21 hour. Some of you don't realize that that basic plan that you get with TradingView, where they just give you the, the 1 minute, 5 minute, 15 minute, I don't know what else they give you, 4 hour, 12 hour, 1 day, 1 month, something like that. It's like the bare minimum. You're missing out on a lot of information with those 5 or 6 time frames. There's so many time frames out there that's just hiding information, hiding all kind of supply and demand levels, and they know that. That's why they don't give it to you on the lowest plan. So, what I would have you consider is this: under publishing ideas, if you ever try to do that, if you go here, you hit publish in the corner, and you hit publish an idea. This is where all my ideas come from. I have to post them here. But when you post them here, we also have to categorize them. And I just want to show you using these categories here. Trend analysis, out of everything that's in here, the only important ones would be trend analysis, fundamental analysis, and if you're good at technical indicators, that'll probably be the next one I would think of. I'm not a big chart patterns person because you got to wait for all of those to be created. After those patterns are created, then you're making your decision afterwards. And there's nothing wrong with it. If you're good at chart patterns, that's fine. But I don't want to wait for something to be created. I want to know what it's doing now. So fundamental is just, getting data. So if you know how to read earnings and growth reports and all that stuff, that's good. Trend is the number one. That's probably why they put it at the top. If you can master these things here, you don't need to know anything else down here. This is what's most important. All that matters is which direction are they going. Nothing else matters. I promise you, nothing else matters. As long as you know the direction, you're going to make money. And these things all here help you with direction. So if you understand support and resistance, supply and demand, pivots, fibs, trend lines, if you know how to read candles, which is what you see me doing sometimes, I can tell you where it's going. Multiple time frame analysis, if you know the seasonality of it. In other words, what time of year does it do certain things? That's kind of what this is. And every pair has a season. If you understand fractals and cycles and stuff like that. So it's all the same. They're all just trends. So that's where I'm getting that from. That's why I have a lot of it. It's important to know what's going on different time frames. So like now looking at this 3 week, I wasn't feeling good about it only on the 12 month because I saw a flip zone. And the flip zone is a chart pattern. So, but I'm not sitting like this is a flip zone here. These 4 candles at the top with these gaps here, that's making what's called a flip zone. And I know that's a chart pattern, but I'm not going to sit here and wait for all the charts to create flip zone patterns before I put my trade in. That's what I mean when I say I don't trade chart patterns. I'm not waiting for a pattern to be created. You know, somebody's waiting for double bottom, double top, you know, all of those different patterns that are created, flag patterns. They all are good and they work and they're real, but I'm not waiting for that. I'm just going to read it and see where it's going way before it starts making patterns. So just like looking at this 8-month, this is telling me that this is a very strong resistance level. I can tell because of this right here and because of this wick. This is a strong resistance level. So I'm going to hold to the idea that it can come down from there. That right now they're on their way up. But I want to find something that proves it. I don't have anything that proves that it's turning from here. See, the only thing I have here, you guys see how price action came down and stopped there and then it played around here. That's just telling me this is strong resistance here that they're going to come into. Is that going to hold? Nah. Pound yen is going higher than that. So this is just going to cause this to pull back somewhere and then continue long. So let me find that. And then after pound yen, I'm out of here, guys. I'm getting sleepy. Ooh, this 1 month is gorgeous. Oh, man, I got to put that on there. Now, that's what I'm talking about, confirmation. So this is a downtrend candlestick pattern, as well as all of this consolidation back here. This is downtrend. I don't have anything else in the past. And then I have this right here letting me know that this is resistance as well. The flip zone would end here. If it goes past this price 177.17, then the uptrend is going to continue. Other than that, this down here is going to hold the downtrend. So let me go ahead and chart this bad boy now that I'm seeing more information. Let's do 240 and 110. So I'm only going to do the big picture, Casey. I know you're probably day trading, but this will at least help you understand where it's going. So the fact that you're long, you're fine. I haven't dialed in anything, but I would be long as well on this trade. Let's leave all of that there. All right, so we have. All right, so for those of you who are interested in pound yen, pound yen is in a big picture uptrend. Oh, I can't wait for this cough to go away. Jeez. If you want to hear Pilarche, I've been trying your Buckleys. You had turned me on to something they sell over in Canada. I found it over here in the U.S. So been trying it. It's been helping me a little bit sleep, but it ain't knocking it out. And I'm like, man, But I'm not the only one. I've been hearing it's been lingering. Let's do 161.20. Let's get rid of that. As a matter of fact, let me see what that would lead if I did that. That is not the right pivot low. This is back here. All right, so I'm going to investigate these areas here. $164.21. All right, so we're getting closer and closer. What price is this? 174.37. So let's do 174. Got to consider spread. $174.33. All right, so we're just going to call this supply. Where is it? Let me go down to 21 hours, what it is. So if they turn from this level here, that is 174.38. So then we'll TP at 174.33. What is this back here? 174.18. Let's do 15 because of that immediate retest back there. 174.15. All right, Casey. So I have 174.15. You're going to 181.76. Yeah, there's going to be a lot of fighting going on to 181.76. You're going to resistance, looks like. Yeah, somewhere around there. You're at resistance. So there's nothing wrong with your level, but there is something here. There's a flip zone, and there's also a supply area here that they could react to. This immediate retest is telling me that this is possibly important. There's also an immediate retest in front of it. So we might get a reaction here, so just be mindful of it. All in all, it is going to hit your TP. I don't think you're wrong about your TP there. 184.07, 181.76. This looks nice on the 4-week. So this is what I'm looking at so far. What is this here? 12-month. We got a flip zone. All right, so looking at the 4-week, I wonder what's in here though. I gotta check this out. So I'm gonna just leave it on the 4-week for now, but looks like price action is heading up to 174.15. I don't know where they are now. So about another 100 pips up. So within 100 pips, Casey, start just kind of protecting yourself. Move your stop loss. Daily chart long entry was 172.84. So you just got in to capture this breakout. So 172.84. Stop loss at 168.38. Geez, your stop loss is really far. 2-to-1 win ratio. Okay, cool. I like the 2-to-1. You know me, I'm a 1-to-1 guy. So the closer you get to 1-to-1, 2-to-1 is the closest. That's good. Yeah, I think you'll be fine. Because the lowest I see it going is this here. Before it turns around, and you have yours at this pivot low here. So I think you'll get it. As far as your TP, just be mindful. It has something to deal with on the way up to your TP. I don't see your TP not being triggered. 181.76. Yeah, you're before mid pivot. This is mid pivot right here. So yeah, I see it being possible. So just be mindful of the flip zone here. That could pull it back. And if it does pull back, these are the two areas for those of you who are not in the trade yet and you're considering where to get in. 164.25 is the first possibility, and then the lowest one will be 161.20. Awesome, Casey. You started like doing 1-to-1. Cool. I told you 1-to-1 is the man. I love 1-to-1. I don't know why I know why people are doing 3-to-1 and all of that. They're trying to make money fast, but that fast money always gets you in trouble. Even people who win the lottery, go look at the results of the lottery winners. Within 5 years, if you're a man, within 5 years, men typically blow through all of their winnings on the lottery. And if you're a female, it takes them about 2 years. And they've learned that it's because they don't know how to manage money. They only know how to spend it. They've been buying lottery tickets all their life. They don't know how to manage big money, nor do they know how to make it. So once they hit the lottery, there's no more money to ever be made in their life. They pretty much stop their jobs and they just go on a spending spree until the money runs out. Men try to do investments in businesses that they know nothing about because they just came off of a job. And now they're trying to open up a business, but they've never took a business course or a class. And then women typically help everybody in the world. They help their family, their mama, their dog, their cat, their bird, and they just spin. And in both situations, they both run out of money. So don't be in a rush to get rich when you've never been there. Take your time making money and learn to manage the money that you have thus far, and then build up over time how to manage that money, because it's a totally different world when you become rich. Money just operates different. You even think differently, because you definitely don't want to go back to being whatever normal is for you. Nobody wants to be normal after experiencing a life of financial security. So I ain't gonna call it rich, but financial security. Once you get to financial security, where money's not even something you think about no more because it's just there, that's a different way of thinking, and you want to get there. And the way to get there, in my opinion, is one-to-one trading. Take your time, don't over leverage, and just keep winning. That's it. That's the secret. Just keep winning, and that's how you're gonna win. Low position sizes and one-to-one trades, meaning whatever your position size is, your risk is, then that's how much you want your risk, your reward and your risk should be the same. And make sure it's no more than 2 to 3% of your position size, and that's it. All right, you guys, I love you, appreciate you. Hope you learned something today, and I hope you're profiting with the professor. Have a good rest of the day. God bless. Actually, have a good weekend. God bless.